Welcome to today's video where we will delve even deeper into an intriguing hypothetical scenario. What if the US dollar was no longer the primary global trading currency? In this video, we will examine the potential macro and microeconomic impacts on the world economy, international trade, debt dynamics, and the geopolitical landscape. So, let's dive right in. The role of the US dollar in the global economy. The US dollar is the world's foremost reserve currency, playing a crucial role in international trade, investments, and exchange rates. This status is primarily due to the size of the US economy, its political stability, and the liquidity of its financial markets. The US dollar's dominance facilitates international transactions and serves as a safe haven asset during times of crisis. The macro impacts of losing the dollar's dominance. 1. Shift in global economic power. If another currency, such as the euro or the Chinese yuan, were to replace the US dollar as the global standard, it could lead to a significant shift in economic power from the United States to the respective region or country. 1. This would alter the dynamics of international trade and investment, potentially leading to a power struggle as countries vie for economic influence. 2. Exchange rate fluctuations. The elimination of the US dollar as the global standard would create more volatility in exchange rates, impacting international trade and capital flows. 2. This could lead to increased uncertainty and risk for businesses, investors, and governments. 2. A more volatile exchange rate environment may also make it difficult for central banks to manage inflation and maintain financial stability. 3. Reduced demand for U.S. assets. If the U.S. dollar were to lose its status, demand for U.S. Treasury securities might decline, leading to higher borrowing costs for the U.S. government and potentially reduced investment in U.S. assets from abroad. 3. This could have consequences for U.S. fiscal policy and could strain the nation's ability to finance its budget and trade deficits. 4. Changes in commodity prices. Commodity prices, which are typically denominated in US dollars, could become more volatile if another currency took its place, impacting countries that rely heavily on commodity exports. 4. This could result in fluctuations in global growth, inflation, and trade patterns. Debt dynamics and the global economy. 1. Sovereign debt. Many countries hold significant amounts of debt denominated in US dollars. 1. If the US dollar were to lose its global reserve status, the value of these debts could fluctuate, making it challenging for countries to manage their debt obligations. 1. This could lead to financial instability and increase the risk of debt crises. 2. Emerging markets. Emerging market economies often rely on US dollar-denominated debt to finance their growth. 2. A shift away from the US dollar could result in higher borrowing costs and increased vulnerability to financial shocks, potentially affecting their economic growth and stability. 3. Private sector debt. Companies around the world also hold substantial amounts of US dollar-denominated debt. 3. A decline in the US dollar's dominance could lead to difficulties for these companies in servicing their debt, potentially resulting in increased default rates and financial instability. Geopolitical implications. 1. Changing power dynamics. The loss of the US dollar's global reserve status would likely result in a significant realignment of global power dynamics. 1. The United States may lose some of its political and economic influence, while other countries, such as China and the European Union, could see their influence grow. 2. International organizations and agreements. The shift away from the US dollar could also impact the functioning of international organizations and agreements, such as the International Monetary Fund, IMF, the World Trade Organization, WTO, and the World Bank. 2. This might necessitate a re-evaluation of global financial and trade rules and norms, potentially leading to a reshaping of these institutions to better accommodate the new global currency landscape. 3. Geopolitical tensions. A decline in the US dollar's dominance could exacerbate existing geopolitical tensions, as countries jockey for influence in the new economic order. 3. This might result in increased rivalry between major powers, such as the US, China, and the EU, which could have wide-ranging implications for international relations, trade policies, and military alliances. 4. Global cooperation and diplomacy. The transition to a new global reserve currency could test the limits of international cooperation and diplomacy. 4. Efforts to forge new agreements and financial structures may be fraught with challenges, as countries navigate the complex and intertwined nature of the global economy. 4. The success of these efforts would be crucial in maintaining global economic stability. The micro-impacts on everyday people. 1. Currency conversion costs. Consumers and businesses engaging in international transactions could face increased costs due to currency conversions, as the process may become more complex and less efficient. 2. Investment implications. Investors may need to adjust their portfolios to accommodate for the changing dynamics of global currency markets. 2. Diversification across different currencies and assets could become more important, as the risks associated with holding a single currency increase. 3. Increased uncertainty. The transition to a new global standard could lead to increased financial uncertainty, potentially affecting job prospects, wages, and overall economic stability for individuals worldwide. 3. This may cause some people to be more cautious in their spending and investment decisions, which could have ripple effects throughout the economy. 4. Inflation. Depending on the new reserve currency, some countries may experience increased inflation due to the change in global currency dynamics, impacting the purchasing power of everyday consumers. 4. This could lead to higher costs of living and increased pressure on households, particularly in countries that are more vulnerable to currency fluctuations. 5. Cross-border transactions. The complexity of international trade and financial transactions could increase, potentially affecting small businesses and individuals who engage in cross-border commerce. 5. The new reserve currency could necessitate adjustments to global payment systems and infrastructure, which might take time and resources to implement. 6. Access to credit. The change in the global reserve currency could also affect access to credit for individuals and businesses, as financial institutions adjust their lending practices in response to the new currency landscape. 6. This could impact the availability and cost of loans, potentially leading to broader consequences for economic growth and development. The hypothetical scenario of the US dollar losing its global standard status would have far-reaching macro and microeconomic consequences, affecting international trade, debt dynamics, and the geopolitical landscape. While this idea may seem unlikely in the near future, understanding these potential impacts can help us better navigate the global economy and prepare for any changes that may arise. Thank you for joining us in exploring this fascinating topic. If you enjoyed the video, don't forget to like, share, and subscribe for more insightful content. Leave a comment down below to let us know what other economic scenarios you'd like us to explore. Till next time, stay curious and keep exploring the world of economics.